Right. So the dollar index, we were looking to sell at the 103.40 area or the 103.70 area. As you can see, it rose towards that level right there, right? Then there was this cut right over here. And upon here, what happened next was that this was the gap. There are two gaps right over here. Now, for this particular trade, right, you can make a decision because that's one thing that you need to know, that is this whole area right here. It's a huge gap on its own. That means this area can be a very strong support area for the dollar index. So if you want to take a sell over here, it can come down. It's not to say it can't come down, but in terms of risk reward, yeah, it's not that enticing. So this is something that you need to make a decision, how you want to take it, whether you want to take it. Okay, I can tell you one thing's for sure. I did not take this trade. It would have triggered higher, give me more room, then not an issue, because you see right here to here, this is your risk. By price coming to this level is not even 1-to-1 at all. So this is something that you need to take note. Okay, so I'm bringing out all these kind of scenarios for you to understand, so that you don't get caught in them just because it triggered and looks nice, you want to jump in. Okay, there are much more better opportunities in other areas. Okay, so for the S&P 500, for example, now this is a good opportunity. We know for sure that the overall market conditions is not good at all, right? We had the carry trade unwinding, and people basically, they were not sure of what's happening. Then you can take advantage of this panic, to put in some good trades. Okay, so we were looking at the 53.25 area to look for the sells. You see, check out bearish price section there. The moment they break over here, it created the gap. So this would have been your entry where the arrow was. This was some nice returns later on. You can see from this area, it dropped even more. Okay, so that's one. Later on, not this point, but later on. So if you have taken out right here, at least you want to protect your trades, then it would be good, because the market would have given you another chance again. And you can see this was the swing low, price broke that impulsively. Same thing. The reason why I want to look for the sells is because we believe that the market could actually come down a bit more, and came down, it did. Okay, so you can see from there, it was a rather strong impulsive move, breaking the swing lows and creating that gap. So this candle went out to fill you, and from there, this was the big movement down. Okay, so that's S&P 500. Next, you have the natural gas. If the S&P 500, you were not clear with the patterns, this would be a very, 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 very clear pattern. So you can see that price coming to our 185 level, and the buying came in. So if you looked at where the gaps were, this was the only area that was clear enough for you to take it. So when price came down later to fill it, it was some nice movements, and that, yeah, natural gas has went up much higher than here already. Okay, so this is one very nice movement. And yeah, that's for the entire week. That's like